All right, hi everybody. I don't want to bore you with going through personal details about me. You can go to my site if you want to and read about me. And besides, it probably doesn't matter much because you're going to listen to me or not listen to me for the next 45 minutes and probably decide if you like some of the things I have to say or if you don't. And that's a good thing to do, actually, because you're all here for some particular reason. It has to do with making money. Maybe you're looking for a shortcut to make money. You want to follow somebody. Maybe you want to learn on your own. But whatever the reason is that you're here, one of the real keys you have to remember is that you need to eventually pick a thing to do, someone to follow, a mentor. I run into too many people who are just what I would call kind of seminar junkies. They keep trying to learn, but they never ever really apply anything that they learn. So I am very laid back. I do not ever try to talk anybody into doing anything with me. I have a huge site called the Free Stuff page. And Sherry, if you wouldn't mind dumping that out there now, that'd be great. It is what I'm calling the greatest collection of free information out there anywhere, of useful free information. There are probably sites that have more useless information and definitions, but this is some real useful information. I do that for a couple of reasons. I really want to give traders a chance to learn this on their own if they want to. And I'm even willing to get together and talk and meet with you if you want to bounce ideas off me, have me review some trades, whatever it is. I'm happy to do that because I tried to do that when I first started, and I respect that. And I also think that eventually, for somebody who does want to become a student or to follow me, the best student is somebody who's already kind of tried everything and realizes, okay, I'd like to get some help, rather than somebody who thinks they know it all from the beginning. So that's the reason I do all that. I'm going to go to this first slide here, and I just want to give you a couple introductory things, and then we'll get going. The first part of this, because I know a lot of you are perhaps not familiar with the topic or newer, I wanted to make sure everybody's on the same page. So I do want to take the first maybe 15 minutes and just kind of discuss some of the basics. So some of you may be bored with that, but I assure you the last half of this will be a little more exciting. If you like charts and some trades, we'll look at some of those, and I'll show you some examples of things. As it says there, one of the things I want to point out is that DTS, Discipline Trading Strategies, I call it DTS, it's my company. Whether I say me or DTS, it's the same thing. But DTS, it's not just day trading. Today is about day trading because that's the topic I chose. It's a focus I kind of want to make for this year for people. But first and foremost, really, that everybody is concerned about is a longer term investing, longer term trading, taking care of your long-term savings. So I want to show you a couple slides on that real quick, but I just want to point out that it's not just about day trading. For me, I like longer term and I like day trading for income. Some of the things I want to talk about today, if you have a bad impression of day trading, there's no need to really. I know a lot of people picture really fast-paced scalping, have to be quick, buying and selling in seconds, never leaving your chair. That is nothing like what I do. As a matter of fact, those people that are in the trading room with me, I usually leave for a couple of hours and let things play out without me watching them, rather than standing there and trying to micromanage things to my detriment. So maybe some of you can relate to that. Before I go to the next slide, I just had a couple of jots here I wanted to make sure I hit on here. Oh, I hate to tell you something else too. I do not have any special deals, offers, promotions. I don't do that. There's never is a sale on anything at DTS. I truly am committed and take pride in helping develop traders that want to be traders. And like I said, there's a huge free stuff page, and I never have any kind of sale because I don't want to talk anybody into doing anything. When you're ready, you'll come see me. If you can make it on your own, that's great. And I don't believe in trying to coerce somebody into doing something. The things that I have that you do pay for, they're on the site. When you're ready, come take a look at them if you want to. But very simply, I have a day trading room for day trading. I have a long-term letter that I'll show you in a second here. And then I also have a seminar program for those who want to learn how to do it themselves. Because one of the things I'll talk about today is, as you know, either you can just kind of get the trades, day trading or long-term, or you can learn to do it for yourself, or both at the same time, and that choice is up to you, really. I also want you to always use common sense when you're listening to people, like in arenas like this, and I don't want to step on any toes. I don't listen to prior speakers, and I'm not ever referring to anybody. But I want you to keep in mind that, the market has been around forever. It's billions of dollars that transfer hands, every whatever period of time. And certainly there are winners and losers in the market. But I don't want you to ever think that you can take super quick shortcuts, that there's some magical tool on a chart that's going to be this magical indicator that's going to work, that it's as simple as saying that this is what support is and that's what you buy. Those simple concepts just don't work, at least not well enough to make money. There's no magic piece of software. I'm sorry, there's just not. If there was, I would use it. Every day, my job, day trading and in the long-term account, is to make as much money as I can. And along the way, I am the great opportunity to also show people how to do that, and sometimes to get paid for showing people how to do that. So that's a great spot for me to be in. But I would do whatever works. If you told me that standing on my head when I hit the mouse button to execute a trade would increase my profitability, I would do it. So I have nothing against any of these things, but I have been around a while. I sit here and stare at charts every day for the last 20 years. And if there was something I felt would help beyond what I do, I would use it. I think there's a lot of fallacies out there about what works and what doesn't work. And I'm just a very straight up person. You ask me, I'll tell you the truth, whatever it is. So with that, let me go to this next slide, because I just want to bring up the fact that everybody is first involved with long-term. And again, that's not what today is about. But I want to just point out a couple things to you. There's this fact that's been out there a long time that people don't seem to like to mention or acknowledge, and that is that 90%, 92% of mutual funds do not beat the market. You can look that up. It's a Standard & Poor's study. They do it every few years. They just don't. And it's not because there's dumb people running the funds. They're not. They're some of the smartest people. It's because there's billions of dollars under asset, and they just can't move that fast. So, but what you can do, though, is if you simply take your own stock trades, either by learning what to do or by following someone who knows what they're doing, you can do great. And by the way, I never ever pick on financial planners. Financial planners, hopefully you can see my arrow here. Financial planners are great people, but they have a different job. They're going to say, okay, here's how you split up your money so you can plan for retirement. And they're going to consider the stock market risky. The market is not risky. It should not be. At least when you do it properly, it's not risky. So keep that in mind. Long-term trader letter at DTS, it does very well. It's based on unique stock selection. It's for stocks. It is doing great this year so far. It's profitable every year. I've been doing it naturally. And it's based on great stock selection. And also there's a balance in there. And I always make money when the market drops. I can't promise you I will if we drop tomorrow, but I always have. I have a very open bias as to what's going to happen. I follow what's actually happening, not what I think is going to happen, not what the world thinks is going to happen. If you do that, you'll find yourself in a lot of trouble. It's not about being right, it's about making money. If Sherry, if you have the long-term trader link, if you want to drop that, it's just a little description that tells you what it's about, and you can look that over at your leisure. So let's get on what today is about, and that's about day trading. I want to divide this into two sections real quick. The first section, you see this little guy sleeping here because it's going to be a little more boring. What is day trading? Truths and myths. Who can or should do it? What is required? I'm going to fly through that as fast as I can so that we can get to the end so you can ask questions. And so I have a little more time for the second section, which most of you will enjoy more. And that is looking at some results, looking at day trading examples, obstacles you may think exist for you, how to do it. And I have a kind of surprising slide in here. And I'll discuss it when I get to it. So let's go through this first section. What is day trading, etc. What is day trading? It means you're simply buying and selling stocks in the same day. In the very simplest concept, it goes like this. If you're long-term, what do you call it? Long-term investing or swing trading, whatever. You may buy 100 shares of stock XYZ, and over 2 weeks, it goes up $2.50, so you make $250. Nice job. As a day trade, we buy 1,000 shares of stock XYZ. Over 2 hours, it goes up 25 cents. We make $250. It's just kind of fast motion is what it is. Now, I'm making it sound very simple, of course. And in essence, it is that simple. We tend to make it complicated. The math is easy and makes sense. But a couple of questions you may have right off the top of your head. You say, well, 1,000 shares of stock, doesn't that cost a lot of money? Well, yes and no. I'm going to talk about that at the end when we talk about obstacles. But naturally, the more you want to make, the more capital is typically required, but it may not be as much as you think. The second question is, isn't that risky to have all that stock? And the answer is no. Actually, day trading in every definition, every sense of the word, is less risky than investing because you can always exit whenever you want to. The market's not closed while you're day trading. And it doesn't matter really how many shares you have, you can exit whenever you hit the limit that you want to consider to be your limit. So there's no risk the way I look at it in day trading. Naturally, you can lose money, you can make money, but there's no risk involved in terms of something happening that's out of your control. So myths, day trading for market professionals only. No, that's not true. This is a big push I wanted to make last year, and I actually had this whole thing going where I really wanted to kind of push day trading just for the common everyday person, the person at home with the kids, the person working a part-time job. You know, everybody pictures day trading like some big market professional thing. It doesn't have to be that at all. Now, I literally was ready to do this a year ago right now, and the coronavirus thing came. And I decided I didn't think it would be a good taste to do this because I didn't want people who were maybe out of a job or something turning in desperation to try to make money trading, because it's not a smart thing to do. You need to step into it slowly. And that's why I really want to push today, and actually I'm pushing a DTS for the first part of this year, is to just start off part-time. I hear so many people say, well, you know, this and this is happening, and then I'm going to do this, and then I'm going to go to start trading full-time. I don't think that's a good idea. It's a lot of pressure. It's better if you are in a situation where you have even one morning, 2 mornings free a week, is to get in there and start trading for some extra income. Learn how to do it, get comfortable with it, and then the decision to go to more and more day trading time or to even go full time is an easy decision because it replaces your other income rather than all of a sudden one day saying, okay, I'm going to retire or I'm going to quit and here's what I'm going to do. I don't push people to do that at all. I think it's a bad idea actually because the pressure makes it difficult. Whether you're doing it yourself, the trades, or whether you're following somebody, it's still tough. As a matter of fact, anyone can start trading tomorrow by following someone in a trading room, something I'll talk about. In other words, one of the obstacles we'll talk about is, well, what do you need to know? Well, if you want to start off and just follow somebody, you can just start off and follow. I have a trading room, you can come in and follow. I'll talk about that in a minute. You can also learn to do this for yourself eventually if you want to, or you can do it both at the same time. The best candidate to do this, believe it or not, is somebody with no experience, and I mean that sincerely. I have trained market makers up here. I have trained 2 market makers on how to day trade. They're difficult to train. Stockbrokers are hopeless. Doctors are tough. The best person is somebody who is just your average everyday person that has an open mind. There's nothing special you have to have in your background. As a matter of fact, most backgrounds people have hurt them when they learn to trade, and it really applies long-term or short-term, but let's stick with short-term for right now. Best candidates are people with no experience. So that's not an excuse for you to not look at doing some day trading. Myths, day trading requires great knowledge about the market, stock fundamentals in the world and US economy. Absolutely not. As a matter of fact, not only is it not required, it's actually detrimental. It's actually detrimental to look or to try and factor this into your thinking. This is always a tough sell for me a lot of times to get people to understand this. I'm going to be talking about this a lot more on Friday. And Sherry, if you have the link to the intro event, the end of it says member only event intro. This Friday, if you become a member at DTS, and it's to be a member at DTS, it's not an expense, it's not a cost, there's no credit card, you don't need your name, you can make up an email, but you'll get emailed information, you'll get invited to special events, and you'll get educational emails. That's all that happens. I very rarely send out any kind of a sales email. I only do so occasionally because people ask. But if you become a member, and that link if you become a member, you will get invited to this Friday's event, and it's going to be a half-day seminar. It is actually the first seminar that is given to people who pay for the DTS seminar program. I invite everyone to this first one. It's great information. It's not sales at all. It's all great information, but it's simply a lot of things that I don't want to take up the Saturday. It's not going to be the deep technical concepts. It's going to be a lot of peripheral stuff. But one of the things we'll talk about is why it is actually detrimental to even look at or consider the concepts of fundamentals, economy, news. All these things often trick people into think that they're working, but they don't. They're actually very detrimental to look at. We look at the results of the news, the fundamentals, the economy. The results show up when people take action on a chart. That is what it's all about. There is no other way to do this, period. We can't even agree to disagree. The next myth, day trading is risky. Well, chewing gum is risky if you're an idiot. Don't be offended when I say idiot, because sometimes I'm an idiot, but it is. By all definitions of risk, day trading is safer than traditional investing. As a matter of fact, your risk is always defined and adhered to. You want to risk 20 bucks? You can. Day trading requires large amounts of capital. Well, this is true and false. Certainly, the more you want to make, the more it requires. But you'll be surprised how you can make great income or even a living from a fairly minimal amount of capital. Now, there is something called the day trading rule. We'll talk about this more in just a little bit after I go through some trade examples. But there is a way that you can get in there part-time for a minimal amount of money and make some really good income. We'll talk about that in just a second. So there's the basics. And again, I'm kind of plowing through this, and I understand that if you have questions, if you, Sherry will ask toward the end, and I will have time to take your questions. I'm good till what time? Till 4 o'clock, right? So we're doing good on time. And also, Sherry will also give you my email, and I will gladly entertain anybody who has questions. You can email me if you don't get them answered here. Feel free. And if you actually have something you want to talk about, you can also set up a time to talk with me. I'm happy to do that with you. So part 2 here is going to be looking at some results, day trading examples, examples, obstacles, how to do it. So let's take a minute here. This is this week. Now, people who know me, there's probably people here listening to me that have known me for months, years, maybe even more than a decade. And whenever I do an event, I always make it a policy to use trade examples from the last couple, 3, 4 days, always. I don't believe in going back to, boy, here's this great trade from the summer of 2018 or something like that, because that's stupid. This is what I do every day. And yeah, I can have an off day. And if I have an off day or two right before an event, I'm going to be in trouble. I'm usually lucky. But I always use the last couple of days. So I'm not pulling out some great day, to show you. This is just what we do. And this is what's posted in the trading room. Now, this is the DTS trading room, my trading room. Every day I get in here, we focus on the morning only. These trades that you see, they are posted and discussed ahead of time, and all these numbers are given to people ahead of time. This is just a summary at the end of the day. So for example, Monday, I only did 1 trade. How boring. I'm a very boring trader. You could fall asleep in my room. I'm a very boring trader. I did 1 trade because you know why? Why did I only do 1 trade? I know you guys can't talk with me, but think about it a second. Because there's only one thing that's set up the way I wanted it to, that did what I wanted it to do, that I felt that I had good odds in taking. And that was Cody. It was a short first thing in the morning. It's 1 trade. The reason there's 3 lines is because it was sold in 3 different increments right through here. So it's one entry. Entry was under 908, stop over 916. It's a very liquid stock. Anybody who wanted to trade this could easily jump in. It was discussed for pre-market. Everybody knew what I was looking at. It was on my screen in the camera. If you wanted to follow along, you could have. If you didn't, it's either because you chose not to, or because it was your first day and you didn't know how to hit the button on your trading platform. The trade, 2/3 of it was done by 10 o'clock. I walked away for this last one. The last one was sold a little bit after 1 o'clock. If you notice, the last part of the trade gave back profit. The biggest profit was right here, 2.1 R, and add a $500 risk amount, that would be $350. 2.1 R would be $1,000, over $1,000 if the whole trade was there. But since 1/3 of it was there, it was $350. You notice then the last part of it gave back some money. Why would you ever give back money? Well, obviously the point is to maximize your profitability. And for targets, I'm terrible at taking targets. I'm probably better than you are, but I'm terrible at taking targets. And I kind of split it up. So naturally, at the end of the day, I wish I would have taken this here and made more money, but this also could have fallen a lot more, and I possibly could have made more money. This is a short, so I'm making money when it falls. So I try and maximize my target taking, and I do a fairly good job at it. But usually that last part I let go for the home run, and sometimes the home run turns out to be giving back some profit. Sometimes it's a home run. So that was the only trade that day because nothing else set up the way that I wanted it to set up. Trading is about odds. It's about having the odds in your favor. I could go on for a whole nother presentation about this. And by the way, if you become a DTS member, I do presentations like this every couple of weeks. And there's a calendar. Sherry, could you post the calendar out there for them? So that is where you can find out about the free events, and also on there are the events for the seminar students, and they're clearly identified which is which. So you can see the upcoming events. We get together every other Monday to do a little scanning night. So it's just good information. Like I said, you're not going to be hit with any kind of sales stuff. I don't do that. Matter of fact, you have to beg to sign up for something. I'm just joking, but I don't make it easy. So that was Monday, and we were done. The strategy here is based on a 60-minute major resistance area, and the entry is on, that was a typo actually, it's a 1-minute secondary, that's a total typo. It's a 1-minute secondary sign of weakness. I just took it right from the room, and there's a typo in there. So then we go to Tuesday, the next day. Tuesday I did 3 trades. Notice that they were all entered before 10:15. I focus on the morning. Sometimes there's a trade that's a little later, maybe up to 11, 11:30. That's really where I want to draw the line. Occasionally on some days, if there's something special going on, or if we have a special gap that occurred or a special market situation, I may say, hey, I'm coming back at lunch to take a look at things. The room stays open generally because I'm usually managing out the things. So Monday MRO, very early, was a long trade. I'm actually going to show you the chart of MRO and show you what I did, so you get an example of exactly what this is like. It's a very liquid stock, no problem getting the shares you want, even if you're trading $1,000 risk or more, no problem getting shares. At 9:45, I shorted J Blue. Why did I do these trades? Well, I did them because there is an exact setup that I look for. I have several setups I like, and I go through my lists. I'll show you that in a minute, and I look for the best of the best setups. And this is why I like stocks. I do trade futures sometimes, but the problem is with futures is there's one chart, there's one setup, and naturally you could look at futures and gold and oil, whatever, but you still have a limited variety. With stocks, I have a list of 300 stocks that are very, very high volume stocks that basically you could trade most any time. And then every night I scan a list of 1,000 stocks that are, they're good for swing trading and maybe trading after the opening minutes for the most part, but there's a big variety, and I look for what I want rather than making myself conform to a chart that I don't like. So J Blue was a short, and then Oxy was a short, just to show you the unique, stock situations. Again, I don't try to be an expert on what these stocks are, what they do, but I believe I was long in oil and short in oil at the same time, and they both worked very well. That's just understanding and reading a chart. Now, I sometimes sell in 2 sections, sometimes in 3. Oxy was designated as halves, so it was 50-50. J Blue was thirds, but the second, third one all at once, same thing with MRO. So each of these had 2 different exits. You can see how the money adds up, boom, 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 boom. The big winner of the day was, well, kind of J Blue and Oxy both together. The last trade was exited at 12:58. And I'm sorry, J Blue the last part of J Blue was held right till close, and it was a nice winner. Oxy 12, almost 1 o'clock. And again, for most of this day, I'm not at the screen. I left the screen yesterday, I think right after J Blue took a target. And then I was, I come back and I let the room know I'm here and I'm gone. They talk among themselves sometimes, but the important thing is when you're day trading, your goal is not to be entertained. It's to make money. It's a business. You're there to make money. You hit it when it's your highest odds moment to you. Now, by the way, I like the morning. It doesn't have to be. You personally could find your best trade setups at lunch or after lunch. That's up to you. I like the morning. There's different ways to make money. What I teach people, you could be trading any time of the day. My personal favorites are in the morning. There are morning reversal times that are very effective in helping to guide trades. A lot of good things happen in the morning to me. And, we're done basically by 10:30, 11 o'clock. I walk away, I leave some trades open. I put, you put automatic stops on them and profit areas, and you walk away and you let them go. And like J Blue, the last part of it went right to close when I exit in the close. So there's the last couple of days. I'm not hiding today. Today was a double the goal day. To me, the goal is 1 hour a day, 1 risk unit a day. I'll talk about what that is in just a minute. It's just that I prepared this all last night, and since this is at 3 o'clock, I didn't have time really to add a lot of stuff. So today was a good day as well. Let me show you what you can do with this. Where do these trades come from? Here we have MRO, J Blue, Oxy. If you're in the room, and again, I'm trying to just explain to you that even for somebody pretty new and you're afraid of day trading. The biggest thing you have to be afraid of, my room, is the bad jokes. And some people, I'm sure, are laughing on the screen right now. I can't see you guys type, but I'm sure some of you are laughing if I have some room members here with me. But that is the biggest thing you have to be afraid of. It's now, you'll see on a slide in a minute, it says 95% of the time. I can't deny that occasionally something comes up kind of out of nowhere. Sometimes a room member suggests something, and most of the time I don't like it because I'm very particular, and I'll tell them, okay, fine, I don't like it. But once in a while something comes up, and it may come up kind of quick, and you may have to scurry if you want to get into it, and maybe you can't. But 95% of the time, everything is discussed ahead of time. We are day trading, so I don't want to call it slow paced, but it is kind of slow paced. It's boring. Where do these selections come from? Well, I scan every night or morning a whole bunch of stocks, and I come up with a favorites list. I send down, watch, this is MRO and JBlue and Oxy, right? So that night before, I had sent to the room members this watch list. Watch list, the daily watches for April 6th. This is what everybody gets in their email, and we also have it in the room the next day. And you'll see that on here, there's MRO, there's Oxy, and there's JBlue. They were on this list. And at 9 o'clock when I get on the mic, we go through and go through this list, and we reduce this all down. This is not end up what's on the screen, but we reduce this all down when we look at what's gapping in the morning, where the market's opening, and we reduce it down to a handful of stocks, maybe 4 to 8 stocks that are the hot list. And these 3 were the ones that made the hot list, along with a couple others, and they're the ones that I look for entry. So these things are brought ahead of time, shown to you, discussed. You're going to be ready to throw up listening to the discussions of the stock. So again, you don't necessarily maybe want to do it, or you decided your own judgment is not to do it, but it's on you what you want to do. What my point is that you're not in a situation where you're going to be wondering what to do or confused what to do. So there was this week, what was last month? What if you said, okay, fine, I want to pull up and do this, and can I make a little money doing this? I got to pay to be in your room a little bit. Well, this is the summary from last month. And again, if you take this sheet, for the month, this is 2 days. If you went back and added it up for last month, what it ends up being is this: the room 21 risk units. I'll talk about what that is, but it means that whatever you determine to risk, you would have made 21 times that gross. There may be some expenses in your trading platform, and those that have to come out of there. But it means if you had $1,000 risk, you'd make $21,000. And yes, I'm talking about from sitting there in the morning, usually a couple of hours, if you did all the trades the way that I did them. If you want to risk $500, you would have made 10,000 plus. You want to risk $200, you would have made 4,000 plus. You want to start off risking $100, well, you would have made about 2,000. You want to start off risking 50 bucks, 20 bucks, whatever it is. There are 23 trading days, and I end up taking between 5 and 6 trades. That's high for me. My goal is to be like 2 to 3 trades, 4 tops, typically. You saw the last 2 days. I took 3 yesterday, I took 2 today, I took 1 on Monday. That's what I'd like. There are some special days last week. Sometimes when I take more trades, it's a bad thing because I'm trying to come back from a bad morning. That was the case on a couple days. There was a couple days where I was adding to a nice profitable day, and we had just some fluky days last month. I thought it was just some weird days where things didn't set up till later. We did some stuff in the morning, came back at lunch, but for the most part, it's more than I'd like to do. Percentage of trades that you were discussed ahead of time, virtually all of them. That's just a soft number. It's not an actual statistic. I'm just saying virtually all the time. These are things that you can follow along with if you want to. Real quickly, some people sometimes ask, well, what's the return on investment? It's a silly question, day trading, because it's not an investment, it's active. You're working, you're using this money to work. But if you went through the math and you just took yesterday, 500 risk per trade, it would have required $32,000 in a 4-to-1 day trading account. I'll talk about that in a second. It would have been only $12,000 of capital needed in a 10-to-1 account. It means that your return would have been 1,600% APR, or 2.5 times it if you use a day trading account. But it's silly talk, because you can also lose a lot that way, but it's not really return on investment. It's working capital. We tend to talk about risk units when you're day trading. In other words, we always base our results on what we've risked. If you're willing to risk so much money, and some of you may be familiar with the term, reward to risk in a trade. Before a trade, you may say, well, I see a profit here of 30 cents on the chart, and I'm going to take a stop of 20 cents at the most, so that's a 1.5 reward to risk. Well, it's the same thing after the fact. whatever you're willing to risk, how much did you make in terms of risk units that you were willing to risk? So yesterday was a 4 risk unit day. If you're risking $500, it was a $2,000 day. If you're risking $100, it was a $400 day. You may start off risking $10, whatever it is. As a matter of fact, for the seminar students who are learning to do this for themselves, I insist that they start off on paper and then risking $5 and $10. Even if you're going to follow me in the room, start off very, very small, because you're going to do stupid things. I've had people follow me when I have a perfect profitable day and they lose money somehow. People do dumb things. So start off small and build your way up no matter what you're doing. I believe in caution, believe in making money, not taking risk or chances, okay? As you get better, there's no upper limit to what you can risk. I mean, you can $1,000 a trade, $1,500. The only barrier you'll come to is at some point you have to get the share size to justify that, and it means your stock selection is going to be reduced. You're going to have to trade stock like Bank of America. If you want to risk $2,000 a trade or something, you're going to have to get to the top 20 to 50 stocks in the market in order to have the volume to get the shares that you need. But I don't think that's a problem for most people right now. On the free stuff page, which I think Sherry has posted for you, there's a whole lot of videos, and there's a new section called the Hall of Fame. And in the Hall of Fame is a video called From Chart Reader to Trader Investor. It talks about this whole R unit concept and the 2 biggest mistakes people make when they come to trading or investing, how they start off and how they end up. So read that, view that video. It's the one I would recommend. View the whole Hall of Fame. As a matter of fact, view everything on the free stuff page. I have people, sometimes I get an email late Sunday saying, I found your free stuff page. I spent the entire weekend looking at stuff. So go through that. The free stuff page you can go to right now. You don't need to be a member. You don't need anything. I suggest you do sign up to be a member and you get other educational events. The trade. Let me go over one trade with you and show you what's involved. I have about 8 minutes here and we're getting toward the end. The trade that you saw on yesterday, the first one was MRO. MRO. How does that get to be on my screen? Why does that become a day trade? To understand everything behind what I'm about to say, you'd have to have the knowledge that I have as a seminar student. I can't hide that, but let me go through and say the words, and it'll click with a lot of you. And I don't know if you'll be able to reproduce this from what I'm saying, but at least you can understand. This is what I saw. This was the chart the day before the trade, and this is what it looked like. This is what I saw, and when I scan hourly charts, and I like this chart. I liked it a lot. I liked it enough that I put it on my list as a potential favorite for the next day. What did I like about it? Well, I'll show you what I liked about it. I like the fact that this pullback the prior day came back to a key support level. It's both minor support and major support. Understanding support is a big deal in the market. I've seen people define support. Most definitions you learn when you go to websites and to fairly uneducated people who try to teach you stuff is you're going to learn just enough to lose money. I'm not saying what they're saying is wrong, it's just woefully incomplete. So there are key areas of support you have to understand. That's a great area of support, and it's the reason I focused on this as 4 out of 300 stocks. So 300 patterns I looked at and 4 stocks I selected to look at the next day. Number 2, it came out of that area the day before on a wide range igniting bar. They're not all good, sometimes they are. The trade was taken right in here as it came over this area. So let me come down to time frame now and show you the 1 minute chart that morning. Now, I'm not a scalper, but if you're going to take trades the opening half hour, the 1 minute chart is what you're using. The 1 minute chart this morning, there's a very key thing that it ended the day like this. It's what I call a little mini mattress, and it makes a great launching pad. And then the next day it had this wide range bar again. Now, some of you may be saying, yeah, wide range bar, that's very bullish. Was that part of this trade, do you think? Was that a key concept in me getting into this? I wish I could see you type right now, but think about it. Was that a key thing in me getting in? If you answered yes, you're way incorrect, because we have to be better than that. I can't make money waiting to get in here and have a stop down here, because then even this huge move makes nothing. I was in here. Let me erase all that. I was in here, remember, 11:30. I was in there. How do you do that? Well, you have to understand, have the confidence to know whether this is going to go higher or lower out of the gates. So that wide range bar was not where I got into the trade up here. This wide range bar is where I took my first target just shortly after entry. I don't normally like to do that, but when you make, theoretically, that was my whole day's goal if I sold the whole thing right there. So that's an exit, and then you can see the rest of the trade, how it goes from there. So that is the strategic concept that goes into a day trade. And by the way, analyzing that chart on a day trade, it's absolutely no different long term. It's just we're using different charts. Instead of using a 60-minute and coming down to a 15 or a 5 or a 1, we're using a weekly chart and coming down to a daily or a 60. So it's all the same concepts. Nothing changes except the charts that you're using. The strategies are all the same. That's key. That was nice. Boom. There we go. I've debated putting this slide up, but I thought it would be kind of funny and also kind of get you in tune with what I'm trying to say, is that you don't need to be a market professional to do this, not even to learn it. So I put a little comparison here. The average person, the average family, hey, like to make some extra money, save for vacation, whatever it is. Okay, well, one of us has to go out to Walmart and cashier there. Okay, well, here's another idea. Why don't you day trade 3 days a week? 3 days a week from 9 to 11. Risk $100, not initially, not day one, but maybe after a couple weeks, risk $100. That would be, if you made an hour a day, a risk unit a day, that would be $300 a week. You'd be putting in 6 hours a week for your work week. You'd have to get up in time to be at the screen by 9 o'clock. So maybe you have to get up 5 minutes early to make your coffee. There's no transportation, no gas, no wear and tear. Your lunch is only a few steps away. You have to pay a trading room fee, which is right now is $179. It may go up in the future, but right now it's $179. And you may have some account expenses, but you'd make $1,303 income less $179, $1,124. You can give yourself a raise whenever you want. Whenever you feel confident, you can increase this risk amount above $100. If you want to do that at Walmart, well, you'd have to work 86 hours that month to make $1,303. You have to get up early, get time to drive there, get yourself ready for work. You'd also have the expenses of gas, auto, wear and tear, blah, blah, blah. This is a little tongue in cheek, but it's not really. It's a real thing I'm trying to say to you. You don't need to be, a matter of fact, the least person I ever want to have contact me is a stockbroker, a former market professional. They're stubborn and they don't know what they're doing. Who do I love? My favorite students have always been people just, oh, well, I owned some stocks a while ago, but I really don't know anything about the market. That's my favorite type person. I had a, matter of fact, there'll be an email about it because I got a real nice comment from her. I had a, well, I know she's a grandma and she took my classes, was in the room for 6 months. She sent me an email saying, Paul, I don't want to be in the room anymore. And she also had the long-term letter. I don't need the letter. She said, I've learned what you've taught me. I'm doing it on my own. I love your letter and room, but I just want to do this on my own. I'm doing great. Thank you so much. That's what some people do. And that was a person who knew nothing about the market at all. Why can't you do this? Experience and skill. Well, you can start off just following in the room. You don't have to learn it. You can learn later if you want to. Capital. There is a day trader rule that says in order to day trade, you have to have $25,000 in the account. It gives you 4-to-1 leverage, so you could be trading $100,000. However, there is a way to do that with much less money if you want to. It's called prop trading, and you can start with $3,000 and have 10-to-1 leverage. This is a firm that I am not a part of. It says not through DTS. It is a firm that I've known the principals of for a long time. I'm not part of this, not an employee. I'm not on their payroll, nothing to do with them. My goal here is to say to some people, if you want to day trade, I don't want you to do this if if you're broke and you're trying to make money. But for those of you that want to make extra income and you're doing okay and your money is somewhere else, you can day trade with $3,000 and you can be doing it in a couple of days. It's your decision if you want to do it. If you want to put that $3,000 in and lose it all in a week, you can do that. You have the right to do that. And if you are interested in that, you need to email me and I will send you the details and put you in touch with the company that does that. And sure, if you would put my email out there, that would be great. And also you can use my email if you have any questions. And what perfect timing, it's 4 o'clock and I'm done. And Sherry, are there any questions for me or do we have to call it at 4? They can always email me.
Oh, you want to stop on time, do you?
I don't want to, but I am kind of a stickler for people wanting to go about their lives and stuff, but I am done. Here's my final slide. And if there are any questions, I will take them. And also I asked if you could post my email so people could find
Yes.
out about the prop
Yes,
trading rule. So if they have questions for me,
and now is the time to ask your questions, folks. And I'm going to post up Paul's email address again. I've put up several links that he asked me to put up at different times.
thank you.
One person here, I don't know if you saw it, but Mark said the jokes are usually pretty good in the room, I guess.
Yeah, well, he probably are buttering me up for something. They're not really that good, but thanks anyhow, Mark.
And then Scott said, just covered the rest of my HBAN for another R.
Ah, nice. I know what he means. So it's trade from the room we were talking about that he beat me on the entry. I know Scott.
All right.
He's a joker too, but yeah, he beat me on that.
All
But I
right.
know,
If anyone has any questions, you need to type them in now because I can tell Paul's got another appointment he's got to be at.
no,
Charles
I
wants
have an
to
appointment
know.
with dinner. I didn't have lunch today, sure. So I'm a little hungry, but other than that, I'm
Uh-oh.
usually bored most of the time, to tell you the truth.
Well,
I will tell you though,
yeah.
half the people are asleep because I bored them to death, and half the people are so dazed and amazed they don't know what to say.
We still have quite a few people on here, so I know they were listening up pretty good. Are you allowed to trade? Charles wants to know, are you allowed to trade options or is that breaking DTS rules?
DTS rules. Well, that's an interesting question. DTS has no rules because I am me and I'm showing you what to do, and you can do whatever you want. Now,
Okay.
day trading with options, I don't generally recommend because it's tough to do. It's not the best thing. It's harder to get filled, etc. Options are strategies you can do longer term. That's fine. But I recommend that if you're limited on funds, that you look at the prop trading concept and take shares. You lose some of it trying to get the options most of the time. I'm very well versed in options. I don't use them for day trading.
Okay, cool. And then Eric wants to know, how often do you cover indexes or futures?
Every day is part of my analysis in the room. We talk about, I'm very big on analyzing the market because I use it for a backdrop, Eric. I always have a market bias and I try and trade stocks around a market bias. So when I have a bullish bias, I try and look for the best long positions, etc. So I'm always analyzing the market. I sometimes will actually take a trade on the futures when it's the best thing to do. That's only about once every 2 weeks because I explained, I think I get one of my best edges from taking stocks that are weaker than the market when the market's weak and vice versa.
Awesome. Welcome to the free page. Just scroll down that free page, you guys. It's crazy. There's a lot of videos there. Thank you so much, Paul. This has been great. I appreciate you joining us.